Hi, and welcome to another edition of CMS Forex News. I'm Christina Robinson, and today is Friday, March 28, 2008. Japan's national CPI rose 1% in February compared to last year. It was higher than expectations and a 10-year high. However, inflation was skewed by the surging energy and food prices because core CPI still registered a negative reading. Tokyo CPI, which is a leading indicator for the national index, as its data is 1 month ahead, saw its prices climb a higher than expected 0.6%. Japanese retail sales surged in February, posting a 3.1% increase on the year, beating forecasts. Most of the gains were inflated by a 14.8% rise in fuel costs. Large retailers pulled their sales out of negative territory, posting a 1.3% increase. However, economists had higher expectations for these large retail figures. Japanese household spending dropped to a flat reading in February when forecasts had called for a 2.5% rise. Consumer confidence is sagging as a result of rising food and energy prices, sluggish wage growth, and a murky outlook for the global economy. Since consumer spending makes up 55% of Japan's GDP, it is critical to sustaining Japan's recent recovery. In the second bit of bad news, the unemployment rate increased to 3.9%. In the UK, GfK consumer confidence fell to -19, the lowest level in 15 years. Consumers fear a recession, and the central bank may be forced to lower rates soon to stimulate growth. Also, the growth rate of UK house prices fell to the lowest level in 12 years and marked the 5th monthly decline in a row. March saw prices decline a monthly 0.6%, while on the year prices only increased 1.1%. Expectations of future prices are also sliding as consumers in the property market are significantly more pessimistic than last year. After ranging for much of last evening and overnight, the pound-yen pair broke under its trading channel and headed south for another 130 pips during the New York session. The euro-pound pair surpassed its record high set on March 16th and has moved more than 120 pips since opening this week. It is very likely the Bank of England will finally bend and cut rates in April, while the ECB is concerned with second-round inflation. Personal spending in the U.S. fell to 0.1% in February compared to 0.4% in January, matching forecasts. It's the slowest pace in more than a year and is fitting the bill as a recession-indicating data. Incomes beat expectations and rose 0.5%. The core PCE index, a favorite measure of inflation for the Fed, cooled in February to 0.1% on the month and 2% on the year. The slowdown in anticipated recession is expected to ease inflation. Finally, the University of Michigan's consumer sentiment in the U.S. fell to 69.5 in its final version for the month as consumers brace for a recession. The sterling traded lower against the greenback. At 2 a.m., the pound-U.S. dollar pair tumbled 100 pips, retraced 50, and dropped another 100 pips during New York trading. As of 1 p.m. Eastern Time, it dropped 150 pips for the session. The euro-U.S. dollar pair formed a sharp V formation after gaining back all of last week's losses. After a roughly 500 pip swing, the pair is poised to end this week about 100 pips higher than it started a week ago. The Kiwi and greenback has been in a stalemate since Wednesday. That is until noon today when the New Zealand-U.S. dollar pair dropped 100 pips and found itself more than 50 pips south of the trading range. The Reserve Bank of Australia will decide on interest rates next week. Some other important releases include the Japanese Tenkan Index and the manufacturing and services data from Europe, the UK, and the U.S. Friday will bring the always important U.S. non-farm employment change. And that's it for the news for this week. Thank you for watching, and join us again Monday right here at CMSFX.com.